Good. Okay, officially. Good morning. Welcome to Market Watch Group Monday Market Kickoff. My name is Scott. I will be your host. As always, what we're going to do is for education and illustrative purposes only. Nothing we do or say should be intended or construed as a recommendation to buy or sell any security or financial product. Decisions made should be at your own risk. We're not brokers. We're not advisors. What are we going to do? All right, let's talk about it. Opening futures and news. We're going to review the market posture and economic calendar. Discuss our mindset for any trades we carried into the weekend. We got some negative futures today. So trades we carried are likely to be starting the morning down. Nothing outrageous. Nothing outrageous. We will watch the opening range and discuss any trade implications. We have a good watch list for this week with plenty of opportunities setting up and ready to trigger. And as always, the trading plan section of the week. This week we are looking at risk management. Risk management. Okay. Let's get cracking. That's not what we wanted. Oh, where's my window that I want? There we go. Let's get going here. Let me just make these things sure these are up. Oracle to control U.S. TikTok algorithm in your Trump back deal. Interesting. Oracle owns, I guess it doesn't own it, it controls it. What else? Cryptos lose out. Oh, interesting. We'll take a quick look at that. Gold is continuing to soar, as is silver. Tylenol makers' shares sink. On report, Trump will link drug to autism. Tylenol and autism. Interesting. That sounds a little iffy. Let me see. I mean, there's a lot of political. Trump's new visa policy. What else? I'm trying to see what we're missing from the news. Am I missing anything in the news? Let's take a quick peek at the economic calendar. I cannot believe we're already in late September. Late September. Okay. Yeah, there's not much. You can see it's when you look at this and you see all of the minor news of this and that, that's not really having a huge impact. But overall, what is the impact? Futures are down 0.27 on the NASDAQ, on the S&P, 0.4 on the Dow, 0.25 on the NASDAQ, 0.21 on the Russell. Gold's up 1 1/3. We really don't have a lot of economic news. We have a speech tomorrow in the afternoon, early afternoon, from Powell. Not much on Wednesday. Thursday, we got a good amount, and that includes a GDP number, standard jobless claims, which for all intents and purposes have come back into the range that we think it's okay, that it's not worsening. We have some minor things, but nothing major until we get to Friday. Friday is it's a long time to wait till we get some news that could be helping us pick a direction. But we've got income spending, and then, of course, this is the big one. That's the one the Fed's going to be paying the most attention to. Yeah, that's the PCE report, inflationary report. And we'll see what that does. Fed Watch, let's take a look. So at this point, we are seeing a market that is banking on the Fed. A favorable Fed, a dovish Fed. That's the expectation. And so anything that we see by way of news that comes out that could impact that, which would be, in fact, the PCE report. That's where the market's going to, I think, have its highest headwinds. So if we're saying, and again, I always like to caution and remind that when we look at this and it says probability, these are the probabilities, is 92%. This is what's priced in. The market's priced in a 92% probability. So if information comes that rattles the expectations, how does it get priced out? Well, if the market drops, then we might see this priced in at 60, and this goes up to 40. What does that mean happened? It means that the market had a retracement in that regard. So, yeah, right? It's not like, oh, there's a 92% chance they cut the rates. We're saying that the market's priced in a 92% chance that it's cut the rate. The market's already advanced in a level that makes that assumption. So it's we have to be very careful, because you won't see that distinction made, right? You will not see that distinction made on the CNBC, or right? They're just gonna be like, oh, there's a 90% chance at rate cut. No, that's not what it means. That's not what it means. Okay, let's keep going. Questions, comments? Oh, good morning, Vladimir. And good morning, El Jago. Good to see you both. All right, so we have a sense of the news. We have a sense of the economic calendar. Let's go take a quick peek at the futures, and then we'll walk through the posture, if you weren't there on Sunday, as far as the underlying market conditions. Now, if I pulled this chart up, right here, and I didn't tell you what it was, I just set it in front of you. And I said, what does this look like to you? How does this chart look? David was fast. No hesitation. Right? He's no hesitation. He said, that looks bullish. That thing's going up. It's been going up. We're at a new high. That's not concerning. The news is where people start thinking and feeling and believing. But what are you seeing? Right? What are you seeing? That's the thing that I'm going to emphasize the most with people is, what do you see? Yeah, David, I agree. It looks bullish. Not anything else. Just bullish. In that regard, that's and you can see we started down 0.2. It's basically just kind of flat. We look overbought if you look at the stochastics. Overbought, and it's coming down a little bit, but I have to always remind people that overbought markets means that there's more buyers than sellers. So does that mean, there certainly could be a pullback. And if we saw a pullback, what would our trend be? Still bullish. So there's room for a pullback. And yet, still bullishness, right? That's important. That's very important. Is that helpful necessarily with trades that you're in right now? Well, then not as much, right? Not always. So right now, prudence. I would imagine at the end of last week, there was a good amount of profit taking. Am I correct? Did you take profits on some trades? Did you tighten stops? What did that look like? Okay, let's go. You guys are quiet this morning. We need more coffee. Definitely need some more coffee. Okay. If you missed it, quick review. Posture stayed exactly the same. Short-term trend, moving steadily. Is it in a... let me do long-term first. Quick peek at the long-term. It did not quite get up all the way to where I would raise my score, but this is closer to a score getting raised than it is a score being lowered. That's for sure. The 1.25 is like solidly intact. It could pull back for literally 6 straight weeks. 3 weeks, it could do one of these, right? Let's take one of those. Let's take this. Let me go back, highlight it. If this happened, I would still be in an uptrend. Even if, and you can see this one tested a little lower but recovered pretty quickly. I said, even if it pulled back to this line, I would still be like, well, as long as it starts to bounce, I'm still going to keep it the way it is. We have room. We have priced in room for a potential pullback, and it still would not disrupt the current bullish trends, the underlying trends. It would be harder to trade. We would not want to be like, well, let's keep pulling the bullish trigger even as that happens, right? We would want to be thinking to ourselves, well, let's not force it. Let's let the market do what it's going to do. But we haven't even seen that start happening. So long term stayed the same. If anything, oriented more towards bullish. Short term stayed the same. I mean, there wasn't like I was thinking maybe I should raise it, but I said if you were a 1.5, I wouldn't argue. Solid bullish trend. Volume was interesting. Sorry, let me move this out of my way. I mean, this is a strong 1 month, and you can see all the selling days are starting to get stale. They were back here. The market looked like it was maybe going to have a drop off from that, right? Back then, when we had that volume, it was a bit concerning, but was immediately counteracted by a buy day. And then we've tied our way up. Tie, buy. We tied our way up. Stephen D will sometimes composite or compile, I don't know, add up 3 of those days and say, you know what, I'm going to give it a buy day. Yeah, that's valid to be like, we had a tie here, and a tie here, and yet advanced during those 3 ties. And he says, you know what, I'm going to give that a buy. Okay, that's fair. We had a couple more ties that didn't do much, and then we had our buy day. But I'll tell you what, this if anything, looks like it is all set to continue at the score that it's at. Honestly, I normally would expect the volume to drop to 0, but not in this situation. Questions on volume, let me know. Let's go back out to 6-month daily. Oh, sorry. Let me take one quick step back. Does the timing, the tails are equal? The timings that we had above average volume, we had above the 5% threshold, and it didn't advance more than 0.5 or decline more than 0.5. Because this score is meant for us to identify conviction. Who has more conviction, right? Is what we're looking to establish. Who has more conviction? Because there isn't a big enough imbalance, we don't think that anything less than, excuse me, we don't think anything less than 0.5%. So for example, when we look at this is the day before. And at the end of the day, this is where we closed. So when we look at this big piece of volume, a chunk of it was the sellers pushing it down. And then another chunk of it was the buyers pushing it back up. And by the time the day ended, we were only down 0.19%. And we said, you know what? That doesn't equal sellers taking control. And clearly it didn't, because the next day it just kept going higher. So we discount that and we say that's a tie. Now the next day it actually went up. This day here was positive 0.47%. And that was an interesting one because we're like, that's very close. It's very close, but in this situation, we said close is not enough, right? Close is not enough. It needs to be the full amount. The next day, interestingly, was up 0.5 on the dot. And because it was up 0.5 on the dot, we gave it the full amount. We gave it the right. So it sometimes we find where it's like, man, it's right on the bubble, right? It's right on the borderline. Do we give it? Do we not give it? And so, yeah, that's the thought process. Okay. Okay. Any other questions? Let me know. That's where we ended up. I don't know how this went back to 20. I thought I had changed this. Give me 1 second. Okay. Let's go back. Real flat today already. 10 minutes in. 10 minutes in, and you can see that it dropped, and then it's just kind of wavering a little bit. Let's keep going. Quick peek at the VIX. And the VIX has been an interesting one. From our scoring, so that all stayed the same. Major market. Now, if you look at the major market, outside of the 200-day, the small caps have basically pushed into a leading position across the board. 133-day, it's moved into a secondary leading position. On the 66-day, it's leading. On the 22-day, it's leading. So what does that tell us? It tells us small caps are in demand. Why? Why are small caps in demand significant and important to us? Well, because the appetite for risk, right? The appetite for risk is very important for us to basically keep our eye on and understand. If the market's appetite for risk is high, that means that they're looking for aggressive places, growth places to put their money, technology, small caps, growth sectors would be the assumption, which would include technology, communication services, financials, industrials, consumer discretionary. Now, the major market is mainly just about the appetite for risk based on the way that we see money move in the four broad indices. One thing we don't see even a hint of across that analysis is defensive posturing. What would defensive posturing be when we see institutions move money? And that's what I want to reemphasize here. This is all about how we analyze what the institutions are doing. They're 90%. We as retail traders essentially trade the moves they make. They move, it makes a wake, we trade the momentum. So right now the question we have is, are we seeing institutions realign, reposition, adjust? And the answer is no. We're not seeing that, right? We're not seeing adjustments. We're seeing status quo, or as we did this last week in our major market, we moved it from a 0.75 to a 1. That's the top score. That's as good as that score gets. Okay. Questions, let me know. Sector stayed the same. We have 3 core sectors leading. This is where we're looking for trades: technology, communication services, and consumer discretionary. If there was a 4th that is starting to show improvement, I would put financials there. The last of the 5 core growth sectors in the market, for me, industrials. Industrials. But I'll tell you what, we saw an amazing trade and move on Caterpillar, right? On Caterpillar. And so, as such, we think there could be some momentum even coming there. Okay, let's keep going. Lastly, the VIX. The VIX lost. That was the only place, and I'll show you why that happened. We had this higher low right here, but right before that, we had this higher high, especially with this little shadow here. But we had this higher high that lost a quarter of a point right there. We had this higher low that lost a quarter of a point right there. And we said this was interesting, and it kind of tried to turn, but this day when we had the buying selling shift, by the time it came back up, it was back into this range, finished in this range. Now you can see we're sort of we're still in a good spot at 16. That's what's important to recognize. Right? At 16, we're still quite low. This is still overall bullish, which, let me erase my drawings and go back over here. This is reflective of bullish. This is 1 out of 2. Remember that 0 is not negative. 0 is neutral. If the VIX were neutral, then we would be like, oh, that's a 0. If it were negative, we'd be going obviously into the negatives. So for us right now, we're maintaining a bullish perspective on it, but with some concern as it's declined from a 1.5 back to a 1. So what would this take? Well, if this is the current high through here, and we're testing it again, let's say tomorrow it gives me a doji, and the next day it comes down and it takes out these 2 days here, 1, 2, that would be enough for me to go ahead and say, oh, that was what I was waiting for. So this thing would then turn like this, and we would say, there it is. That's the lower high. That will raise our score back up a quarter of a point. Keep that in mind. And if we get down here and break through all of these lows, so if we get back down to 14 essentially, there's another quarter of a point waiting there. So we know what it takes. Like, I don't want you to feel like it's this great mystery from week to week and we just have to wait until. No, we have an idea of what we think is going to happen. Not what we think is going to happen, but what would it take for it to happen. I don't think, oh, that's what's going to happen. I think, what would it be required for me to get that half of a point back in my bullish posture? That's what it would be. Right? Right there. That's what it would be. Okay, let me know if you have any questions. Let's get to the watch list. Let's get in there. Let's talk about some trades, or at least some potential trades. Starting at the top. Apple, got there. Now I'm like, it's funny because we talk about trades sometimes, and I'm like, oh, did anyone end up taking this trade? And I know a few people did. But this got up to that target. Where did this target come from? Well, it came from this last one that we tried for. This was an Apple trade we did, and when it pulled back, it was kind of a volatile entry. But that is our entry, right? And then it took off and made its move. Now what? Now there's nothing here for us. Right? There's nothing here for us unless we see a pullback now. Pullback to where? That 240 mark looks pretty good. Pulls back to 240, new trade. Now here's the great thing about this. Apple moving up here. Keep in mind what that means. Apple is 11%. 11% of the NASDAQ. 6% of the S&P. Between Apple and Microsoft, you're talking 20% of the NASDAQ. And combined, I believe it's 12 or 13% of the S&P. So Microsoft is flat, but trying to recover. Apple is bullish. Those are two very important components. Archer Daniels was one that we were in. I know I said I'm out of this one. I don't have time. It really never broke this support level. And I think that there's a potential. But at this point, when I see the length of this, it's like it tried, it pretended to try, and now it's this. It's in this consolidation. Right? It's in this consolidation. As such, at this point for me, it's got to break it. It's got to pull back. And then I get that higher low. Until I see that, it's going to be more of a watch and wait. Amazon is on a hiccup. So Amazon had its trend. It was moving. It got this little turn. And you can see, that's the thing is, when we go back and we look at Apple and we're like, oh man, look at this. What do we think about it? The thought is that's the right signal. But does it exactly work the way like the Apple did? No, not always. What happened here? It hiccuped. This is the support level. Has it broken the support level? No. But has it hiccuped? Yes. Now, what if it pauses and then it turns and it does something like this? Well, if you were in the trade, you're thinking, finally, vindication. Finally, some vindication. If you are not in the trade, what are you thinking? You're thinking, okay, I might go ahead and pull the trigger. So this is on my list, right? This one is definitely on my list. It's good to see you, Nicasio. Have a great day at work, my friend. Okay, APH. APH. This one's on the list. Why? Because we said all we need is a pullback. All we need is a pullback. This was an interesting, we're like, did we miss that? And I'm like, well, if I did, I did. But now you'll notice we're getting this. My thought process, this thing could pull all the way back to here, would still be above the 50. There's a trade there waiting for us. Right? Most definitely. Most definitely. We just have to be patient. Let's keep going. AVGO, one of our top setups. Down 1% today. You can see that even as it's down, that stochastics is pinching. Support is holding. All we need is a buy candle. Boom. That could come tomorrow. This is going to cross, and we would look at this and think, okay, where do we think it's going to go from here? I would likely put my first target here. That's a great place to take some profits off the table. And then I would likely think about a higher high, maybe in this area. That's the thought process, right? That's the thought process. Okay. Definitely on the list. So there you go. We're in the A's. Apple just reached a target. ADM failed. APH is setting up, AVGO is setting up. Kind of gives you a sense of the balance of things that we have. Okay, AXP. Financials are just a little overextended. There was opportunity there. It kind of paused. There's a little bit of the hiccup from this first signal. You can see the signal there. That's the same thing we were looking for just now. There's the pullback. It's holding support. What do we wait for? That buy day. Boom, it starts to come. Now what? Well, if you're in it, you're pushing a little bit, but if not, what are your thoughts? You're thinking to yourself, if and when this pulls back, there's the next trade. A little overextended for now. In fact, you'll even notice up here, it's pinching the other way. It's pinching from a lack of momentum. Okay. Bank of America, same deal. Same deal. There's a lot of potential bullishness in the financials, but we just need to see them give us some kind of a consolidation that we can latch onto for a new trade. I'm going to be patient on those. Oh gosh, no, sorry. It's not on the watch list. Let me pull that up, David. You're right. You're right. Same kind of thing from ANET. We got the signal, we got a day in, and now we're just kind of on a pause here. This is one of the reasons I like to draw this line. If I'm in range of this line, I'm going to be like, you can see what's going on. We're 30 minutes in. This is still showing momentum. This is pulled back more than I, of course, would want being in the trade. But is the trade wrong? Is it invalidated? Do I need to do anything here to make an adjustment? No. It looks okay. It looks like I should still hold on to it. Now, if I get a second day, then all of a sudden the thought is, wait a second, we're breaking away from this line. We don't want to see this type of a divergence from the line, right? The other thing you have the ability to do, switch to a Heikin-Ashi candle. So right now you could say, you know what? I'm going to move my stop to right here. This hasn't even turned red yet on the Heikin-Ashis. If you notice, it looks quite similar to this. 1, 2, pause, boom, boom, big. Right? Very similar here as could be setting up here. So even if I saw something like this, that looks the same. And then it moved. So we definitely don't want to just arbitrarily, bail out of the trade unnecessarily. All right, let's keep looking. Sorry that I missed that one. I'm actually going to drop that on the watch list so I don't miss it again. All right, let's go back up. And where was I? Caterpillar. Caterpillar made a great move. Now it's emerging into what I would say is a flag type pattern. Very bullish. You can see that it's crossed. Now I would say anything above this line is great for a potential retracement. Okay. So, patience. Could this trade this week? Absolutely. CCJ, that was one that was just kind of choppy for me. I didn't like this. That was our tweezer hold. Let's see. Let's see. If we had an actual pullback in here, that's more tradable. That's where we can get the right reward to risk ratios, etc. CELH. I'll tell you what, I was like thinking about it here. It was just too much of a volatile entry. It was too much of a gap up. And then it paused, and then it's like, oh, is that a hiccup? And it was thinking about it, and then it just sort of floundered. What does that mean? Off the list. Off the list. That was on, and then just never materialized. CLS overextended. If we see a pullback here, that would definitely be more viable. Quite honestly, it's very sideways right now at this point. You can see we have this going on. But if we ended up getting an actual consolidation back down, old resistance becomes new support, you'd see this would just kind of make this convergence. That would be a little while away. That's not one where like, ooh, we could trade that this week. Very unlikely. Very unlikely that we would trade that this week. Right? We can see that some are, some aren't. Let's keep going. And I apologize. I didn't change the schedule, but we are going the extra 15 minutes, so I'm not in a rush, if you'll notice. I want to make sure we really look at these from a trading perspective and feel comfortable with what they look like. Okay. Coinbase. Actually, Coinbase, even though we heard that Bitcoin, and I'll go take a peek at it now, even though we heard Bitcoin was down, this all of a sudden turned into this. We got this bullish move, and now we have this consolidation. So if it stabilizes in here and starts to turn, I would say that's bullish, and we might expect the next trend to develop coming out of this consolidation. And when this thing trends, it can do quite well. So let's take a look at what Bitcoin is doing. I'm going to go to BTC /BTC. I mean, it's 1%. I mean, this is actually quite similar. You can see we had this consolidation. Buyers have pushed it up over a long cycle here. You can see. Now what? Now the sellers are coming back in. But if it starts to stabilize here and then turns, that's a higher low. And that's the kind of thing that we're exactly looking for. It's subtle back here, but you can see the same kind of a thing where it busted up. It had this little pause. Then it went up and a little pause, and then it went up and a little pause, and then it went up. And you can see there was, from the time it broke out, we got this. Okay. Bitcoin and Coinbase. Cisco. So Cisco had a hiccup, and then it's trying. At this point, if I don't see recovery, that's probably the end of the line for me. And I'll take the loss. And it will be a small loss. Not a bad loss, but it'll definitely be a small loss. Okay. Keep going. DocuSign, give me 1 second. I'm going to try to go alphabetically. Delta. Delta looked like it wanted to turn and then rolled over. I don't love this because of the impact on consumer discretionary. We'll see if there's a sector-wide pattern there. DoorDash. DoorDash could be pulling back. I mean, it's hard to tell. This thing's just been on a little bit of a run. We haven't had any kind of consistent consolidation. That might make us think, where would I look to establish the next trade? Here's the Dow today. Dow's holding up just fine. DocuSign, which I believe is in the comm services arena. Oh yeah, David, love it. It busted up, had a little consolidation, and you can see here it turned. You can't see it very well because the whole time it's quote unquote overbought, and the whole time it's been overbought, what has it done? It's gone straight up, basically. Maybe not straight up, but it's gone up. Right now, I would say it's flagging. There's my last level. I would say I'm looking for support to find anywhere in this range. It could break the flag, or it could pull all the way back into this range, and then if it turns viable. I think that looks great. Let's add it to the list. Good call out. Good call out. Okay. Now I kind of do have to go. I've been like, oh, I have extra time today. I can just sort of meander through. Let's get going here. EA on a pullback would be fine. EXPE's on a pullback. This is setting up beautifully for us. Add this to like AVGO. This is right in line with what we want. It's pulling back. Right? It's pulling back. I would say somewhere around here-ish is where I would want it to turn by. It may just pop. It may go a little bit more and then pop. When it pops, we would expect this to turn, and we would say that's our next trade. Ford, really kind of not doing much for me now. I mean, it's just real flat in there. I'm not sure that I see a signal setting up. Futu. It's kind of turned into more, right? At this point, it is right on the 50. So there's still some validity to it. But at the same time, I think you could go either way with this. This is 50-50. If it turned, you could say, all right, I'm going to try it. Or you might think to yourself, I'm going to wait and see if it does one of these and then turns. Either one's valid. It still overall is bullish, but we have to recognize that this has been happening. Fiber, very close. Big move up. Smaller move back. Higher low. It's pinching. I would still want to see it do something like this to convince me, and then I could look to go to the next trade. Put a stop underneath. Have that good reward to risk ratio. GE overextended. There's nothing there. Gold, we said, I don't know, is that turning? Maybe. It's gold's a tough one to trade right now, I would say. Okay. Let's keep going. Google. All right, Google. We've been waiting patiently. I would love to see Google come on back, give us another opportunity. I thought I got some windfall through here, and then it just kept on going and made another one of these. Another one of these happened just kind of out of nowhere. I mean, it did technically break out. Goldman, a little overextended. Let's be patient with financials. Right? Patient with financials. Hood, you may have a piece of this on. You can see it gave a nice little turn. It's a pause. There's no reason to panic on this one right now. Howmet, nothing there. IBM, still going. We had this move. And this one's taking a little longer, but it might still have a little bit to go. And then what? Well, on the next pullback, we'll try it. Some of you may still be in it. That's when we looked at Intel. I don't know about Intel. IWM is fine. It's holding up. Levi. So Levi was one that I took some and kept some. And so I'm glad, right, that I still have a little piece. I still think there's a chance this thing could go. We'll see. Or it might give you the chance to exit whatever you didn't exit yet. Okay, let's keep going. Lumentum. Pulling back. Looking for a trade here. I would probably put... Oh, I don't want this to be a real line. Drawing tools. I would probably look for this somewhere in here on the pullback. If we get it. Las Vegas Sands has been, it's a little iffy there. LYV. It's trying to stabilize right at the 50. This is where it has to stabilize. If it turns, then we may have something. Right? Okay, let's keep going. Meta. Overextended. Morgan Stanley, patience. Microsoft, patience. Micron, patience. We've got earnings coming out. Netflix. Okay, I would say no. Northrop Grumman is still kind of in a maybe zone. Nvidia, no. PGY pulling back. There's a potential. Anything in here or any break of the flag, viable. We'll keep an eye on this one. This is a nice momentum stock. PLTR, overextended. Right? Overextended. QQQ looks fine. I want you to notice that we've recovered from the morning. It's moved back up. What does our opening range tell us? We've broken the opening range to the upside. If you're day trading right now, this was the opening range. Right? When we broke the opening range to the upside, and now what? You can see it's holding. Even if it comes back in, if it comes back into this and finds a higher low in the opening range after breaking to the upside, that's orienting us where? Bullishly. Anybody looking to day trade today? Let me know. I'd be curious. Roblox. Overextended. Reddit. Reddit. Oh, Reddit. Come on back to us. Come on down. Looking good. Setting up. RF. Nothing there for me. I'm not sure I'm going to keep that much longer. Rocket Lab. Rocket Lab is starting to hold up. Could be setting up for a trade here. Silver, a bit overextended. SoFi, definitely overextended. The SPY is back to almost positive again, right? TME, setting up. I know that I've made a couple of stabs at it. The losses have been pretty muted, so I'm still thinking, hey, maybe it's third time's the charm. Dottie is day and swing trading. Okay, so there you go. Tesla overextended. TSM overextended. Uber, oof, blasting off today. Where's Melody? That thing is moving. Upwork, way overextended. So some of these they're just out of reach. Some of these, there's nothing we're doing with these, right? We're just sort of waiting to see what happens as they pull back. Okay, let's keep going. Don does a little bit as well. Okay, fair. Visa, not for me. The VIX, even though the market's up a little bit, the VIX is actually also up a little bit. So that tells us that today's move is still a little bit taken by fear. Walmart setting up. Walmart has this nice cup and handle. Here's the handle. Anywhere through here, that's a nice looking trade. Has a little bit of a defensiveness to it that is helpful. Okay, I think that there could be alerts. I would say it's not hugely likely, but maybe there may be something that fires. More likely the next day or so, but I'm open to it. We're bullish. We have a bullish score on the market posture. Okay, questions? Just a normal Monday. There you go. Any questions, comments, or concerns? Let me know. Good luck. David said, all right, it's good to see everybody. Be patient. Don't force trades. Don't panic on trades that you're in that aren't showing that they're wrong yet. And things will be fine. I'll be back tomorrow morning for the market open, and then we'll have lots of Q&A in the evening tomorrow. Good to see everybody. Have a great rest of your day. As always, happy trading.